Roncancio, Senior Portfolio Manager. Today I wanted to start off our monthly market update talking about the S&P 500. Now I want to take us back, all the way back to 2008. Okay, the S&P went from 1,500 all the way down to 700. Okay, pretty big drop. And we really haven't seen that type of a drop until December of 2018. Okay, now before then you can see the steady rise of the S&P. Not a lot of volatility, really. We had some, but nothing more than a 10% pullback, really, all the way until we got to January 2018. Okay. Now let's zoom in here. So I really want to talk about the environment that we are now in. 2017 was a pretty Goldilocks year, all the way up until January 2018, when the S&P reared its ugly head and dropped down around 10%, all the way from 2873 all the way down to the bottom to around 2534. Pretty big drop, okay? And since then, we've seen a heightened level of volatility, okay? There's been a lot of volatility throughout all of 2018, actually double that of 2008, literally. It was a really crazy year in 2018. I've never seen anything like it in my career. 2019 continues to really amaze me in regards to the level of volatility that we're seeing, especially through the month of August. Now, I want to touch on really kind of the formation that we're seeing here, which is a good sign. Okay, this is a inverse head and shoulders pattern, and I have it drawn out using the purple trend lines. This would be the left shoulder, this would be the head, and this would be the right shoulder. Okay. Now, what happens whenever there's a breakout for an inverse head and shoulders pattern is that we will have that breakout, but then we will always come back and retest the neckline. Okay, which is what we're kind of seeing right here, where we have major resistance. Okay. Now we've seen it, and I want to touch on what we've seen for the month of August. The month of August has been a pretty interesting month, to say the least. We've been literally trading in a range all month. We came down from a high. An all-time high of 3,028, all the way down to touch this major resistance point of 28.22. Okay, now since August 2nd or August 5th right here, we've been trading in this range, all the way to about 29.42 to the bottom here at 28.26. We've just been trading in this range all month. Okay, we've seen it hit major resistance 1, 2, 3 times, almost comes and hit it 4 times, okay? And we do have some trend lines drawn. Let's zoom out. I want to touch on our trend lines. So trend lines give us an idea on the direction in which the market is headed. Okay, we have a long-term trend line drawn from December all the way through to where we are today. We also have another trend line from June drawn out all the way through where we're at today as well. Okay, now we broke through this trend line, the long-term trend line, on August 5th, okay? And we've been trading in this range between these two trend lines. Like I talked about before, we've been trading in the range all of August, okay? Now we've come and touched this trend line 1, 2, 3, 4, 5, 6, 7, 8 different times. We've literally went and bounced off this trend line. So this is a major area of support for us. If we see the market break through this trend line and get below 28, 28.49, that's going to be a major concern for us. And if we see it break even more below 28.26, that's going to really cause us to start to take a defensive position on the financial markets and we're going to start to add some hedges. Now we may start to add those hedges in advance if we do see it break through the 28.52 level of resistance to protect us in case we do have a major breakthrough. Because if we break through this 28.26 and then break through 2800, things could get really ugly. Okay, so we are prepared for that. We have a plan in place to protect your assets if that happens. However, right now, what we're seeing possibly a break to the upside. Okay, we bounced off that trend line again, okay, which is a really strong sign. And now what we want to see is the market break above 28.95. If we can break above 28.95, that's going to make me really happy, because then we're going to go and we have a chance to break above 29.39, which would be wonderful. Okay. So right now we do have a long position in the market. We are optimistic based on the direction we see the market going, an ascending wedge, which is a good thing. Okay, so right now, we're going to keep risk on. Okay, if things start to break down, we break through our trend line and we break through our major resistance, and then we break through 2800. You're going to start to see us adding some inverse positions to protect your assets and also start moving into cash and bonds. Okay, but we do have a plan in place for whichever direction the market decides to go, because whichever move we take is going to be a big move, and it should be happening here in the next month. So I just wanted to give you guys this update on what we're seeing in the financial markets and where we see things moving forward. But we do have a plan in place to protect your assets if things do fall apart. But right now, we're optimistic. We hope things continue to move higher like they are. Now, I want to touch on some of our holdings. Why don't we touch on Baidu? Now, I really like Baidu, and it's basically the Facebook of China, one of the largest tech companies in the world. Had blowout earnings recently. We saw that by the spike in the price here from a little bit above 90 all the way to about 113. It cooled off a little bit, but this is what happens a lot after a large burst upward. We're going to have a little bit of a pullback before we move higher. So we see this thing honestly going to right around at least the $150 range. So we do have a really nice price target for this, and we do see a very healthy gain. The reason why I'm so optimistic about this particular investment is, why don't we take a walk down memory lane also. Let's go way back. Way, all the way to 2013. Oh, there we go. So do you see where we're at in 2013? Which point the cursor right here? And see where we're at today. We're basically at the same place that we were at in 2013. So we got this unbelievable company at a great discount. And we really see this thing moving higher, and we have a lot more room to run, all the way to 270. Right now we're sitting at a $1.04. So there is a lot of downside left for this investment. So it makes us very optimistic for the future based on its RSI. It's not that overbought. But I just kind of wanted to go over just a couple of investments. Why don't we touch on FF? We have Disney. Okay, let's touch on Disney while we're here. You can see we have two levels of resistance strong. We have a level at 146, we have a level at 132. You notice we've really been trading in this range since it broke out on earnings on April 12th. Okay, so ever since April 12th, we've just been literally trading in this range. Okay, all the way to where we're at today in August. Okay, so right now we really like our entry point for Disney because we got it at a discount compared to what it was back in April. And we do see it going up to at least $146. You might see us start to trim our positioning right around 146 just to make sure that we protect our gains in case we do have a pullback. Because a lot of times what you'll see it go and test the all-time high, and essentially this is a hard level of resistance right here. And what will happen is sometimes it will reject off of it or it'll break through. Now if we have a breakthrough, that's wonderful because we're going to be able to really lock in some gains. And then what we see a lot of times, it'll come back down and retest before it moves higher. Okay, the market moves in waves. Okay, so whenever we do have a break of resistance, the market's always going to come back and retest that resistance before moving higher. But I just kind of want to touch on two of our investments just to kind of give you a little insight as to how we make our decisions. But right now, things are looking good for the market as long as we stay above that current trend line that I showed you for the S&P 500. And so we're going to stick with our current plan, but we do have a plan for our portfolio if we do see the market break down. But I just kind of wanted to give you guys that monthly market update. Thank you so much for your time. Again, Taylor Roncancio, Senior Portfolio Manager, and have a great day.
Hi, my name is also Roncancio, and I'm president and partner here. I wanted to go ahead and talk a little bit about one of our investments that I really, really like, Square. Now, if you look closely at the investment, what you'll see is that back on October 1st, 2018, the investment's priced at right around $100. So, it was trading at a premium. And since then, what we've seen is, we've seen it come down, regain itself. But as you can see, currently, it's sitting right around $61. Now, they had a pretty heavy drop after earnings where we were able to actually get in at a very, very nice discount. And one of the reasons we really like Square is just because of how fast they're growing their revenue right now and expanding worldwide. Now, another thing we really like about Square that makes it so appealing is that its relative strength is below 40. It's sitting right here at about 33, 34%. And what that tells me that it's what we would call a good buy because it's been oversold. So we're getting in at a great value. but also really like the growth potential because as you can see, it's been at previous highs at $100. Current price is 60. We've got almost a 50% upside there. You know, about 45% upside, getting it back to the previous highs. I don't see any reason why it can't do that here over the next couple months to, you know, a little bit longer term. Who knows, it could get there even sooner with the way this market's been moving. But also, I really like it because you can see here, it came down and it hit right around $60 3 times now. This blue line represents a strong resistance level. And we've seen it bounce off 3 times. Typically an investment, when it does bounce off of a resistance point on the 3rd time, it signifies a retracement, which we are hoping to see here very soon when this market can get its feet back under itself. But other than that, really like Square. I want to thank you for your time today, and we look forward to continuing to service you to the highest degree. Thank you so much.